Hi, I'm Samantha, real estate lawyer at Maravitz Petechen.
And I'm Max, a business lawyer here at Maravitz Petechen. We're going to be tackling that question from a few different angles, including your mortgage, tax, estate planning, and corporate basics.
If this is your own home, it's simpler to buy in your own name for the lending side because they can use your personal credit history.
Borrowing through a corporation is different. A corporation, especially a recently incorporated one, won't have access to your credit history. You should expect that banks will require personal guarantees from either the majority shareholders or other principals of the corporation. You should also expect that your lender will require that they give consent if any change of control over the corporation happens.
Taxes are a big deal. If you're a first-time home buyer, you should consider some of the credits that are available to you, land transfer tax credits, as well as the new GST rebate that is available. And if you're buying in your personal residence in your personal name, then you can benefit from a capital gains exemption.
Corporations don't get those individual perks and programs, so it rarely makes sense to purchase your primary residence through a corporation. On the other hand, if you're looking at a commercial property or an investment property, having it through a corporation may make sense in terms of separating liability, clarifying co-ownership, or offering tax flexibility. In either case, if you're looking at an investment or a commercial property, you definitely want to get the advice of a tax planning specialist or advisor to make sure that the planning is efficient and optimal for you.
If you're purchasing property with another person and you want the property to go to them when you pass, you can take title as joint tenants. This allows your surviving owner to take the title without having to go through probate for the property specifically.
If you're buying property in a corporation, you need to consider how other documents aside from your will are going to affect how that property is dispersed after your passing. This means that you'll need to take into account documents like a shareholders agreement, potentially trusts that you establish for your assets, in addition to your will and other estate planning documents. There is one warning here. If your corporation that owns real property is dissolved improperly, that real property can go to the government through what's called a sheet to the crown. In order to insulate against that risk, you need to make sure that your corporation is properly maintained, meaning it's filing its annual reports and has its annual minutes done, its records are up to date. We can help with that, but it's something you need to be aware of.
So start with your goal. Do you want to live in the property? Is it commercial or for an investment? Then speak with your mortgage advisor, your accountant, and call us to get help with your structure and the transaction.